This TradingView indicator uses multi-time frame analysis to find perfect entries in the market. In today's video, we're going to take a look at how to open up the indicator. We will take a look at the best settings, and we will also, of course, take a look at how to use it correctly. So guys, let's not waste any time here. Without further ado, let's jump right into it. So let's start this video off here by opening up a clean chart in TradingView. Right now, as I'm speaking, I'm looking at gold on the daily time frame. And now we want to open up the indicator. So we go up here to the indicators tab, and what we want to search for here is LTF and then candle insights. And we want to go down here and choose the indicator here created by Sireman. And now, as you can see, the indicator has appeared here on the chart. But when you first open up the indicator, it will pretty much be unusable. So what we need to do here is that we need to go up here to the settings tab and change the settings of the indicator. Here on the settings tab, there are a few important settings we need to change. And one of the most important settings here is the time frame setting. So what this indicator basically does is that it allows us to analyze the current candle but on a lower time frame. And the first setting here is what time frame we want to choose. So remember, we are currently on the daily time frame, and what I recommend here is that we want to fit at least 20 candles on the lower time frame. So in this case, we want to go for 1 hour or even lower. So what I'm gonna choose here is that I'm actually gonna go even lower here, down to the 30 minutes, because when we choose lower time frames, we will get more precise signals. The next setting is the amount of candles, and this is basically how many candles on the lower time frame we want the indicator to show. The standard here is 20, which is pretty good. Some traders prefer a little bit shorter, perhaps 15, or a little bit longer, perhaps 25. But for this setting, I'm actually gonna keep it at 20. I think that's a good number, but if you want to, you can definitely change this one up a bit. As for the next settings, I do want to do some changes here. The first one, I want to change to a more pink color. The second one, I want to go for gray. Third one, blue, and this one also the same gray. For this strategy, we want to uncheck the range and the high and low. And you can also choose if you want to show the table or not. As you can see, the table is here in the top, and you can see that the current time frame is a daily time frame and the lower time frame is 30 here. So I think the show table is a good setting to keep. Now guys, we are done with the settings and we are ready to press OK. So now, as you can see, our chart looks like this. And these candles we have right here is basically the candles that are within this last green candlestick right here. So this can actually help us get more precise entry signals within this candle. But before we trade, guys, remember that we always want to look at the market structure. So before entering a trade, it is important that we have market structure supporting our move. So what do I mean by this? Well, if we look a bit to the left here, you can actually see that the gold price had a very significant level around this gray area. And you may wonder, why is this the case? Well, you can see that this gray area has been respected multiple times. You can see, for example, support all the way back here in May 2022, support, broke support, flip support to become resistance. Looking a bit more left here, we can also see that this one acted as a massive demand zone right here. You can see strong demand coming in right here. So when the price comes back to this area once again, it is likely that we are seeing smart money coming in once again, and that we are ready for a move towards the upside. So what we're looking out for here on the shorter term time frames is that we're looking out for some kind of bullish entry signal. And if you take a look at these candles right here, the most obvious bullish signal is actually this one right here. And you may wonder, why is this a good entry point? Well, this is for two reasons. First of all, you can see that we did get a bounce here at the demand area. This is very nice to see. But you can also see that the next bullish candle right here, together with the previous candle, actually printed a bullish engulfing pattern. So we have a bullish engulfing pattern on the short-term time frame. We also have an important support area. So we have two bullish signals happening at the same time, and this is why this is such a good entry point. So we enter here at the candle close of this lower time frame candle. As for your stop loss, you can either set it just below the lowest point, or you can actually set it below the demand area right here. With the wider stop loss, you allow for some more wiggle room, so the price can, for example, go down here and test the area once again before we see the pump. As for the profit target, you can either keep it simple with a 2-to-1 risk to reward ratio, or you can even go further here because we do expect a strong pump on this demand area. And as you guys can see here, in this case, it was a perfect sniper entry. Alright guys, so if you guys want to improve your trading even further, I highly recommend you all to check out the video I made just recently on an amazing smart money indicator. I really hope to see you guys over there, but for now, take care, ciao ciao.